Hello and welcome to a special edition of the Gold, Goats, and Guns with me, Tom Luongo, and my good friend from England, Crypto Rich. We're going to sit down and chat for a little bit. This is something that we do kind of infrequently. Rich is a regular subscriber to the channel, and he's got his own channel that's focused on cryptocurrencies and Bitcoin and the rest, which is also really cool. And I absolutely recommend you subscribe to his work. But we do this regularly just to kind of touch base and talk about more issues of the day. And I think that this particular talk is really, really interesting. I had a great time doing it. It's going to come at you in a couple of different parts. So here's part one with my talk from last Thursday, September 11th. Enjoy.
Hi everybody, this is Crypto Rich working with you to get rich with crypto, filling our pockets with crypto profits. I have with me one of my favorite political and economic commentators. He's into Bitcoin and Bullion and Brexit and Bolton, and that's some of the stuff we're going to be talking about. I'm going to have links in the description below. You have to subscribe to his channel. You have to, and go check out his stuff. And Tom's been on it. He's been on my channel before, and I'm really excited and grateful that he's back on. Before I let you know, this is not investment advice. Do your own due diligence and don't invest any more than you can afford to lose. Don't invest any more. We'll just stop there because things are really shaky all over.
That I will not argue with, Rich. That I will not argue with at all.
Apart from Bitcoin and Bullion. Apart from Bitcoin and the precious metals. Anyway, Tom, listen, thank you so much. Anything you want to say just to introduce yourself very briefly?
Sure. So you all know who I am. I'm Tom Luongo. I write for my own site, tomluongo.me. I run a blog called Gold, Goats, and Guns. I also publish an investment newsletter every month of the same title that's available through Patreon at patreon.com/Gold, Goats, and Guns. You can find me on Twitter at TFL1728. I also write for moneyandmarkets.com, Newsmax, as well as Strategic Culture Foundation as well. So
very good. And I am a subscriber to your channel and I listen to your videos. Everyone that comes out, I listen to. And I've just
for better or for worse.
I don't always agree with what you say. I don't always agree with your perspective. I don't even always understand it, but I value the outlook. Like, okay, right. This is from another angle. This could be useful for me, right? Because it's not like I have the only on truth.
Of course, we should all embrace opposite points of view that we're not particularly enamored with. I mean, it's the way we error check our own theses about things. It's, it's one thing. Otherwise, we just, create echo chambers for ourselves. And so it's good to be challenged. It's good to, I challenge myself on a regular basis. I read people who I don't agree with. I usually then scream at the walls and then write something and write some polemic otherwise. But yeah, that's what you do. That's the way we go forward. I mean, it just is what it is, right? So.
Yes. And I got to confess, I do agree with most of what you say, and I really do enjoy.
That's good. I'm glad. And, dude, I know we come from very different political backgrounds, right? I'm hardcore libertarian. You're not, but at the edges of all of this stuff, when it comes to the current political milieu, everybody's criticisms of what's happening are pretty solid. It's the question of what we're going to do in the implementation afterwards. I can have a perfectly valid conversation with the hardest core progressives here in the United States complaining about bank policy or corporatocracy or the MIC or any of this stuff. And we all will get along famously until I say, well, tear it all down. And they go, no, we need to have stronger regulation. And then, that's when everything falls apart. But specification versus implementation, I talk about this all the time. It's very, very important not to conflate the two, because specifying the problem and crafting solutions to problems are completely different. And it's important that we keep those discussions separate so that we can find common ground with one another and use that as a way to error check ourselves, because everybody has good ideas about implementation. And at the end of the day, we're going to have to compromise in some way along the path, because, at the end of the day, otherwise you're just an ideologue. And our fundamental problem today politically is that everybody has become ideologically possessed along a particular line and is not willing to entertain the validity of the other and an opposing point of view. Did I mention Brexit?
Not yet. We will come to that. There's two things I want to say, right? So one is, I think there are two fundamental principles. There may be more that you and I both agree on. So one is voluntary self-governance, and the other is do no harm.
Absolutely.
Yeah, voluntary
Absolutely.
that whatever setup has to, what we
Sure.
need at every level is more democracy, not less, right?
So yeah,
Voluntary
depending
democracy,
on how you define the term democracy, but
voluntary
absolutely.
self-governance,
Yeah,
voluntary
absolutely. Voluntary
self-governance.
self-governance. If I say this to people all the time. If you want to organize yourself into commie land and you want to live right next door to me in Ancapistan, I'm all for it. I'll even protect your border for you because that's what I'm going to do. But don't come with guns telling me I have to do it your way.
Yeah,
I mean, that's it. As far as that's concerned, that's where you should, and to me, that's a very libertarian perspective on things.
yes,
Even if you want to organize if you think that we have to centralize the control of the means of production or whatever, that's fine. Just understand that it has to be voluntary. So
absolutely.
anarcho-syndicalism, I get. Anarcho-capitalism, I get. I happen to side on the side of anarcho-capitalism versus anarcho-syndicalism. Fine, we'll have that discussion, but let's do that over like a whiskey and a cigar, and not over guns and butter, right? Let's not do that.
Absolutely. Absolutely. Now, Tom, there's something else I've been wanting to, completely forgot to say this offline. So I'm going to say it online, right? And I'm going to have the link in the description below for people who are watching this. Nothing scandalous. I don't know if you've ever come across politicalcompass.com.
No, I haven't.
Okay. So what they do, it's a very simple test. I don't know how accurate it is, but it is fun. It's free.
Yes, I have actually.
Yeah.
Okay, now that you think of it, now that you're mentioning, I've even taken the test.
Yeah, have you taken it? And where are you on the grid?
On the political compass, they had me pegged all wrong because I unfortunately argued with about 30%, the premise of about 30% of the questions because these were questions that were written by non-libertarians. So when you do this, oh, dude, seriously, they had me pegged as some kind of half-crazed neocon. I'm like, dude, you're just so wrong.
Oh, that's so funny.
But when you start parsing things through the non-aggression principle, we start parsing things that way. We're very good at like finding the flaws in the bias in how the question was worded.
Yeah.
Okay. And there's and look, it's just the way things are. All surveys are done that way. I remember when I ran for state house in Florida back in 2002, and the Gun Owners of America. And I'm as pro-gun as you got. I believe I should be allowed to own a 50 cal. I'm not allowed to shoot anybody with it, but I'm allowed to own it. And the Gun Owners of America, their 20-question survey, at least 3 of them violated fundamental principles of federalism. Like they were so scared of local and state laws usurping the Second Amendment that they wrote their questions that they just wanted yeses to everything. If you answered yes to everything, then you were a good guy. I answered 17 out of 20 with annotations on at least 3 of the. We sent them back with big scribbles, and friends of mine and I all did this, and we're like, the premise of these questions is wrong, and they violate the fundamental principles of federalism. County government should be able to usurp the Second Amendment. Sorry, it's just the way I fundamentally believe that. I don't live in that world, but I fundamentally believe that. And I got like a B from the Gun Owners of America, whereas like my Republican opponent got an A because he knew the game and he just didn't give a damn, and he just checked 20, just checked yes and walked on. I'm like, y'all are just as bad as the NRA.
Okay.
And look, I sent that back to him. Same kind of thing. Yeah. The premise of the question is very important.
I didn't argue about the question. It didn't even occur to me. Right? And I like the results. I've done it twice, spread by 5 different years, and I'm very proud of where I am. I am bottom left, extreme bottom left. Everybody else around me that I know in my life, they're all fascists. They're all authoritarian.
Yeah. I haven't taken it in years, so they may have updated the survey. I mean, I can't remember the last time I took the political compass test. It got probably 2010, 2009. I mean, long enough that I had forgotten the name of the site. But now that you've mentioned it, I can remember what the site looked like back then because I have a photographic memory. I'm like, oh, okay, yeah, that site. And I remember going, yeah, they were wrong in about 30% of their questions. So they pegged me. They got me mostly right, but they got me wrong. They got me way right of center, and way right of center, and libertarian, but way right of center. And I'm not right. I'm not particularly right of center.
No,
I will come across that way when I'm on one of my good rants, but really not. I'm truly a live and let live, non-aggression principle, golden rule kind of guy. But without any political bias, at a fundamental and philosophical level.
Yes. Okay. Very good. Very good. Well, listen, thank you.
Now that we got our bona fides out of the way.
Again, right? Sorry?
now that we have our voluntarist bona fides out of the way.
That's right. Well, look, let's start by talking about, I suppose, the state of the economy, the bullion and the effects of bullion and Bitcoin. And this is my read now. I think I've said it to you, and for those watching, my training is in child protection social work. So obviously I know everything that I'm talking about when it comes to economics, right?
Absolutely.
Right. So today, Draghi announced
you're like half the members of parliament. You're now qualified to sit in parliament, Rich.
Oh, thank you. But they lowered the ECB interest rates minus 0.5%, negative. So that is, my God, right? And then,
negative interest rates.
And then also, I saw that gold and silver popped up a little bit today in response to that. Bitcoin didn't.
Nope.
Right, and I know you do
cover. Bitcoin's in a post boom bust malaise. Technically, it's just the momentum is not in Bitcoin right now. And there's just money has flown. Money has moved out. There's no more. The Momo monkeys are not moving the market. Okay, they just aren't. And by Momo monkeys being the momentum guys, the guys who just chase momentum, looking to make a trade and play arbitrage. This is a good thing as far as Bitcoin's concerned. We'll go back to Draghi and gold in a second, but just from a read, I do twice weekly market reports for my patrons. That's part of what you get along with the newsletter. And that's only $4 a month. Just twice weekly half-hour video podcast. I do technical analysis, I do commentary of the day, and I go over gold, Bitcoin, oil, the dollar, whatever currency pair I think is interesting, whatever. Right. So I'm constantly looking at the Bitcoin chart and looking how it operates both at the weekly and the monthly level. And Bitcoin to me right now, with I could like put the chart up, I can show you what I'm talking about, but right now Bitcoin looks like it's coiling. We're getting a series of higher highs and higher lows, so that you're creating, it's like a spring, it's like a ball. Yeah. And it's going to do that. And it looks like it's going to do that. This week is a critical week. You don't want to see a move down below about 9,500 this week. That would be bad, because that would violate a low from like 2 weeks ago, which would then upset that pattern. And it would bias it to the downside, that we may see 9,000. But since we're seeing that pattern, as long as that pattern is emerging, that's a good thing, because once you take the speculators and the momentum jockeys out of the market, okay, it takes all the drama out of the market, but then it also lets you know who's real and what the new fair value that the market believes in. I think that fair value, that Bitcoin right now is coiling around 10,000, between 10 and 10.5. And that's good. That's a very good thing after coiling, basing at 4,000 not 9 months ago. Right. So think about where you were, think about where you are, and then go, we all get like so used to the volatility and the excitement and the adrenaline and all that stuff that we kind of get upset when it doesn't continue. Like, no, it's actually a very good thing when the market settles down. It means that market is starting to mature. Even though we've had a couple of very bullish events recently with, real ETFs and on-chain settled futures being approved by the SEC and the CFTC and whatnot. This is all very good for maturing the Bitcoin market. Okay, and in every way that professional traders have ways to hedge now, they have ways to speculate over time. These are the things they need to have. These are the tools they need to have to professionalize the market, so that one would argue that maybe the market shouldn't be professionalized, but I would actually argue in the long run it's better that way. Right. I don't like, now, for example, I think on-chain settled futures are great. I think cash settled speculative contracts for difference, like they trade on the COMEX, I got no use for those, right? Those are instruments will be settled in dollars or euros or some other thing, and that just creates virtual pressure on the markets as in effect the tail wagging the dog. It's what they use, and it's how it's the argument that's made in the bullion markets as well. It's how they create 200 ounces of paper gold for every ounce of gold that the COMEX actually holds, or whatever. Similar arguments that you'll hear in the precious metal space, and they're mostly right. But at the same time, and this is also a very important point for the layman to remember, and I'm going into the technical stuff to prove my bona fides, but at the same time, here's the what's the best word I'm looking for? Here's your CEO bullet point. Here's your takeaway. Here's your bottom line. The bottom line is very simple, and that is that Bitcoin is professionalizing, and it is, oh God, and I had my point and now I lost it. God damn it, I hate when that happens. So I got lost in my own positives. That the bottom line here is that the market is functioning well, and you cannot manipulate a market against its primary trend, which is the big takeaway. And Bitcoin's absolutely in a bull market. So you can manipulate the market in the short term. You can make it go down on a Friday afternoon at 5 o'clock if you want to paint the tape for the close so that you can get, so you can jockey for position on Monday. You can do that. You can manipulate against the trend in the short term. As a matter of fact, I think Donald Trump comes out every Thursday and Friday and says the most outrageous things in order to move the Dow and the dollar in his direction. But he's trying to manipulate against the primary trend.
Yeah.
I actually wrote about this the other day. You can't do that. So if you're worried about those things, and you see things like that happening, like the daily chart or the hourly chart or the weekly chart, back out a time frame. Don't look at the daily chart anymore. Go look at the weekly chart. See if you see that same pattern in the weekly chart. If you don't, then someone's playing a game, or there's just, it's just what it is, and that's very important to understand as a trader and as an investor and as somebody who watches these markets and wants to know what's going on. A basic understanding of the fractal nature of time and the basic and how to read charts from even just a simple basic level, how to read candlesticks, will really decomplicate markets for you and really de-stress you. And this is what I emphasize in my market reports all the time when I do technical analysis. I'm like, I keep it as simple as possible. I don't draw lines on charts. I don't use MACD. I don't use any of those. I just use the open, high, low, close. I show you I just show you the candlesticks, and I just let the candlesticks tell me what's happening.
Yes.
Because there's a story on that page. Go find the story. And if you do that and you strip all the other stuff out, and this was taught to me by a professional trader about 7 or 8 years ago. I used to work with a guy over in Vietnam who was an excellent trader, and he taught me this very simply. And then to do that and some very simple quantitative manipulation of the actual data, not derivatives of the data, but the actual data, you get a very clear picture of what's happening. And then you can just live in the moment, and then you can structure your trade based on the kind of person that you are. If you're looking at Bitcoin over the long term, you should never look at anything less than a monthly or quarterly chart. Shouldn't care less. You should check the price on at the end of every week, and only in the context of the monthly or quarterly chart. You should never look at it in any other context, because it'll just drive you crazy.
Right.
And it'll drive you to make bad decisions.
Yes.
It'll drive you to make emotional decisions that you don't want to make.
Yes, because I have learned that from listening to your market reports, that it is just the quarterly and then the monthly and the weekly, and then you kind of tell, okay, it's going this way. Now, going back to what you said earlier about it's going down, less and less volatility, and that's good. Right. What we got is consolidation.
Yes, that would in general market speak, that's what we call consolidation. So when you're listening to like CNBC or whatever, they'll say, "Oh, the market's consolidating," or just that's what that means. Now, markets consolidate in different ways, and one of those consolidation patterns is a decaying, that kind of decaying exponential or triangle pattern. I'm not a big fan of that. Now, again, this doesn't tell you whether it's going to go up or go down after it's done consolidating. And triangle patterns are notorious for not having any signal whatsoever. They can 50% of the time they go up, and they're a coin flip. The market is consolidating around what it feels is a fair price. And then the supply of buyers and sellers, because that's what prices are, and that's what these are. The supply of buyers and sellers are in balance. And then humans hate things being in equilibrium. We need to push the pawn in some way. We need to, in chess speak, push the pawn. We need to push the envelope and then find out what's going on and find out how committed you are to that $10,000 price. So the bulls will take it $100 higher and see what happens. The bears will take it $100 lower and see what happens. And then see how everybody reacts. And then different players will come in and react differently, and we'll start to get a move. Or some exogenous event like Mario Draghi shows up and restarts the worst aspects of 2008's post-2008 policy, negative interest rate policy, more QE, more bond buying, more balance sheet expansion, more this, more everything. And we need it all. And it's absolutely necessary.
Okay. So let's
that's crazy. That also moved the market.
Let's move on to that. Why is he doing that, and what's wrong with it? Now, hold on, Tom. There is a background to this, right? Which is, I'm surrounded by many of my friends. I live in the southeast of England.
Hmm.
right? I have a comfortable middle-class lifestyle. I'm in that demographic. So I'm
Sure.
surrounded by Remainers, right?
Yes.
And I say to them two things. One is the European Union is fundamentally anti-democratic. Two, it's bust. It's bust. The Remainers are lying that we're better off. It's
I know.
all the German bonds are negative. It's bust.
That's
So
like, so yeah, when we talk about German bunds, right? Let's start there. What have we been dealing with for the last few months? Bitcoin moving from 3,000 to 15,000 or whatever it was at the peak.
14,000.
What's that? Yeah, about around 14 grand. You're right. That was a sign of safe haven trade. Now, whether it was coming out of China, North Korea, or Europe, or this or that, whatever, it doesn't matter. It was a safe haven trade. Gold moving from 1,300 through the post-Brexit high at 1,375 into the 1,500s, and then now consolidating in the 1,500s. Okay, it's doing the same thing over the last couple of weeks, and it wants to go higher, but it's going to take a breather for a little bit. Silver breaking out from $13 up to $19.50. That was short covering and safe haven trade. But more importantly, German bunds dropping like 1.5 points. Now, in market parlance, U.S. Treasuries, German bunds, Swiss franc bonds, Swiss government bonds, and then to a lesser extent, UK gilts. Those are considered safe haven assets. Okay, the market rushes to them because those are the strongest economies in the strongest governments. The most, in the case of Germany, one of the strongest economies. In the case of the United States, the fact that there's a $60 trillion synthetic short against the dollar in form of U.S. denominated debt out there, and everybody does their trade in dollars, it's kind of important. But the two dominant trade currencies in the world at this point are the U.S. dollar and the euro. Therefore, people are going to rush into buying bonds in that denominated in those currencies of the strongest economy. In the euro space, that would be Germany, and then you add the Swiss franc in there as well, because the Swiss are still considered a safe haven asset, a safe haven trade, as well as the U.S. dollar. And what we've seen is a massive, massive safe haven trade that we haven't seen since 2008, right? Since post-TARP 2008, post-Lehman Brothers implosion, AIG was going under, all that stuff. Okay, that's what's happening. And it's actually, I would argue, it's actually worse today than it was then. I think we have the mother of all safe haven trades. And we're starting to see, and the main reason it's worse is because gold and Bitcoin and other assets, which are, we're not seeing a move into bonds and the currencies and the euro and the dollar. We're seeing people fly into gold and Bitcoin at the same time, while the dollar is also rising. They're all rising at the same time. And that's a very weird trade. Usually gold will trade as the anti-dollar in a safe haven trade because people need dollars. So the easiest thing to do is to sell gold, because gold is liquid, it's fast, it trades in the spot market, it trades in the futures market. You can get access, you can get direct access to dollars immediately now if you're a banker and you're a bank and you're short, a couple $100 million in your reserves, in your overnight reserves, and you got to shore up your tier one capital that night. This is what you do. You sell your gold. So this is why gold fell in 2008 from 1033 to 681 while the world was melting down. It wasn't because it was a safe haven, because people needed dollars, and so they sold gold. Yeah. Today, we're in the beginning of this sovereign debt crisis that's starting to emerge, and all of these bonds moving into negative yield territory is an unnatural event. It's an expression of extreme fear in the markets because people are not investing in German 10 years at minus 0.7%. It's really 0.52 this morning. I just checked it like 20 minutes ago. Because they think they're going to get a great return on their money. They want a return of their money, not a return on their money. That's a fear trade.
Oh my God. So it's like, okay, the situation is so bad. I'll put in my 10 million euros knowing I'll get 99.995.
Yes, because if I invest it in the real market, I'm going to lose more than that.
Oh, wow.
But that's what negative interest rates are telling you. But at the same time, you've got momentum players just running the momentum and front running the trades and front running the central bank's response to the craziness by doing exactly what Draghi did this morning. And so they've been pushing the yields down even lower, doing his work for him by front running the trade. But at some point, that's going to change, because at some point you run out of fools to sell to. And then once the selling starts, it all collapses. No different than a blow off peak in Bitcoin. We get up to 14 grand. We're up there. No one wants that. No one wants Bitcoin at 14 grand. There's one buyer. He bought. Everybody else is selling. Whoa, and then the price drops to 10 grand. Guess what? It's going to have the same thing's going to happen in German bunds. And what's more important than this is that when that happens, at the same time that these things are, this is happening as a structural thing, trade evolving over months, interest rate derivative swap arrangements for businesses doing their normal everyday business are writing interest rate swaps against all of those against those positions, creating the very synthetic short fuel necessary, or not short fuel, but long position to liquidate all that trade and fuel it on the downside. So as fast as it goes up, I always say, what leverage giveth on the way up takes away twice as fast on the way down. So when the European bond markets break, they're going to break spectacularly. And German, say 10 years trading at negative 0.5% today will move to 0.5% overnight. And then they'll be at 2%. Then they'll be at 4%. Then they'll be at 7%. And everybody will be like, what the hell just happened?
And then everybody will go bust because there isn't the money to make the repayments. Now, that's my understanding. Okay, thank you. Now, why are German interest rates negative? Germany's the strongest economy in Europe.
Because of what I just said. It's purely a fear trade at this point. They're worried about Italy going bust. They're worried about war with Iran. They're worried about global slowdown in trade. They're worried about all those things, and they're not caring at this point about return. It's not about return. It's about parking in a liquid asset that they can use to pledge as collateral to some other obligation that they have. Because remember, all of these things I talked about can be pledged as tier 1 capital in the interbank markets and as reserves. And you load up, if a bank or a fund or whatever loads up on this stuff, they're doing so purely to be able to shore up their capital position, because they can pledge those on a dollar for dollar basis at 100%. They can pledge them at par is the parlance. They can pledge them as par as collateral against a repo loan with a central bank or somebody else, and that's what they're doing. Okay, and there's a real need for repo collateral and for interbank collateral, because when you borrow euros from somebody else to shore up your position today, you need to post collateral against that loan. Well, a German Bund will do. It doesn't matter what it's trading against, they'll do it. And then they may lose a little bit in the transaction, but they don't care. You post the German Bund as collateral, you post the US dollar, the Euro dollar bond as collateral, or whatever you do. And this is what's happening. So we watch the Euro dollar markets, we watch, I watch all this stuff, obliquely. I don't watch it every day, but I don't need to. I should probably watch it a little bit more closely than I do as we're getting into this crisis period, but my nose tends to tell me where to go, where's the hot spot of the week. Lately, it's been Brexit. Soon, it's going to be Iran and Turkey and a couple other things. But we'll talk about that on my live streams, Monday nights at 8, Friday nights at 8:30. Shameless plug, because
No, you plug away. More people, please subscribe to Tom's channel.
So doing all this, right? So that's what's happening. Okay, and Bitcoin's a part of this conversation, and gold is a part of this conversation. And I was arguing with some guys who think they understand Austrian economics on Twitter the other day, telling me that silver was a commodity. I'm like, not yet. Ain't a commodity yet, dude. There's going to be plenty of people out there looking at a gold to silver ratio of 95 going, silver's a monetary asset. I'm buying that. They're just looking at it going, silver's cheap. Silver's $14. Are you kidding me? Okay, I'll call up APMEX. I'll buy 100 ounces and I'll stick 100 ounces of Silver Eagles in my closet. I'm going to do it. I'm going to buy the silver ETF or whatever. They're going to do it because it's still a safe haven asset. Platinum's not a safe haven asset. Palladium's not a safe haven asset. Those are industrial metals, no different than lead or nickel or anything else. Maybe during the extreme crisis period, you might see platinum start to acquire a little bit of that, but it's just not there. And silver won't be in 5 or 6 years. It's just too useful industrially, but that's another discussion for a different day. Right. But all this stuff ties into Brexit. The European Union is broke, and the European Union needs the United Kingdom's regular contributions to the UK, to the EU budget, but it's bigger than that. This is ideological. This goes back to what you and I were talking about originally. People who run the EU and the people who put the EU together are absolute rampant ideologues. They believe absolutely in the inevitability of the European Union. It is the future of tomorrow, even though we all are looking around. Us Bitcoin guys are going, decentralization and disintermediation is the future. What are you talking about? you're like the guy still arguing for franchise cable monopolies in the United States in an era when everybody's like buying a la carte cable via streaming services.
Yeah.
What's wrong with you, right? So it's insane, but it is what it is. And it's an ideology that's built over a lifetime. Nothing's going to change until they're out of power, until they all die off or whatever they're going to do. They're going to fight like hell to stop it all. They're going to lie. They're going to cheat. They're going to steal. The Scottish Supreme Court the other day, unbelievable ruling against Brexit, against Boris Johnson. Meanwhile, the Northern Irish, I just see this thing this morning, the Northern Irish court turns around and goes, no, Johnson was right, even though we disagree, even though we think that a no-deal Brexit is bad for Northern Ireland. He still said, but these lawsuits are purely political. I mean, at least the Northern Irish have some integrity.
Yeah.
Right?
Well, also the English court ruled against it. And by the time this video goes out on our channels, things could have moved so quickly anyway.
Oh, God almighty. It's like I said something the other day. I alluded earlier that Trump has a tendency to to tweet on Thursday and Friday. And this again is my spidey sense. You just get a sense of what's going on in the world. I'm like, on Wednesday, I record my market reports. And I say, well, this is what may happen on Thursday and Friday before the week's over. And invariably, by the time I get to Sunday, I got to write an entirely different narrative because Trump goes in and he's done this like 5 or 6 weeks in a row. And I'm like, so I wound up writing an article on this called, I don't know, Trump, that Friday night used to be the best night on television in the U.S. back when I was a teenager, Dallas and all the soaps and all that stuff. And then now it's Friday afternoon. It's the best soap opera in the world. The money that fake money can buy, because every Friday afternoon Trump is going to say something to, oh yeah, we're going to have trade talks with China this weekend, and then the markets go up 400 points, and the dollar crashes half a point, and all this weird stuff happens. We're like, and then it all reverses itself on Monday, and lather, rinse, repeat. We do it every week. I'm like, dude, stop it. But
it's not insider trading when Trump does it, because he's the supreme insider.
Yeah, no, it's not even that it's insider trading or anything else. He's honestly, I think he knows what he's doing when he does that. And so, I sometimes it's on a Thursday, I'm like, I really want to write an article about what's going on in the markets, because Friday could just completely make it worthless by the time if I send it into my editor over at Money and Markets, if I write an article this afternoon and it posts by 9 o'clock Friday morning, by 2 o'clock, it could be complete gibberish.
Yes.
I mean, that's how crazy things are. And it's like, oh my God.
Okay. Let me rein you back in a little bit, right? I want to go back to something, which is,
sure.
I reckon, let me say this. So people are rushing to German bunds as a safe haven because everything else is so bad. They're not rushing to the UK gilts, even though as much because they have positive interest rate.
Yeah, well, that's actually a good thing. It's actually, this is what annoys me about Trump, and just to annoys me about Trump is like the EU doing this is absolutely what he wants to see. China devaluing, allowing the yuan to devalue is actually doing his job for him. He wants the capital to come back to the United States. He's got a positive yield spread versus UK versus US debt. So there's real yield in U.S. debt, even with the 10-year down below 2%, there's still real yield against inflation. There's real yield against every other safe haven asset. You're seeing money, you're seeing capital flow into the United States, and to a lesser extent, it's Mark Carney's not. You'll notice that Mark Carney at the BOE has changed his stance on Brexit and hasn't moved monetary policy one whit during all of this.
He's changed his stance on Brexit.
No, he hasn't changed.
He
hasn't changed monetary policy, and because he hasn't, that's your big tell. He's not following the ECB and the Bank of Japan and everybody else, lowering rates and freaking out. He's not doing it.
He's a Remainer, right?
He is. So he's
yeah.
Absolutely is. But at the same time, he goes to Jackson Hole and tells everybody that we're going to have national cryptocurrencies and get rid of the dollar. Did you see that?
Yeah.
So what's going on with Mark Carney? Now, Mark Carney obviously is an insider's insider. I would, if he was to be tapped to lead the IMF now that Christine Lagarde's going to run the ECB, I would not be surprised. That's the level that Mark Carney's at, right? Excuse me, my phone is ringing. Let me just make it stop. Shut up. Okay. But Carney not dropping interest rates during all this Brexit stuff is a big tell. He knows that this is the way to keep the British pound from collapsing completely, because if he lowers rates, he's signaling to the market that he's scared of the future. See, this is the problem with, I'm about to write an article about this actually. I got the outline for it about Turkey, and I'm going to use Turkey and Erdogan as an example of how to run counter IMF monetary policy. Because I wrote an article last week about how Russia's central bank has sabotaged their recovery after the ruble crisis of 2014 by not lowering interest rates quick enough. They did the right thing in raising interest rates during the crisis to shock and awe people and to stop the capital outflow. But then the IMF prescription is to lower interest rates slowly and then target a specific level of inflation. Inflation targeting is a cancer, and I don't want to go into it here because it'll take me an hour. But just understand that when you're at different times during the credit cycle and different times during the economic cycle, lowering and raising rates means different things. Now, you'll never hear that from CNBC. You'll never hear that from the central bankers. It's always, and the Keynesians and Samuelsonians who actually run monetary policy, they'll always tell you that lowering interest rates is stimulative and raising interest rates is depressive of economic action. That's not the thing. Powell's actually been doing it right over at the Fed, and it annoys me that Trump makes me defend a central banker. Makes me feel dirty, and I need to go take a shower. But dead serious. I mean, can I go now? I'll be back in 5 minutes.
I can go.
It needs to wash off. But the Powell's been right in saying, look, the economy is strong. Capital is flowing into the United States. We need to raise rates and show people that we're not scared of the global slowdown that's happening in the rest of the world. If I lower rates, it means that the dollar that everything's at risk, and I need to flood the markets with cheaper capital in order to shore up dollar liquidity around the world, which I don't want to do, because that's actually then going to undermine the recovery here. It's going to send the wrong signal to the banks, whereas the common parlance, or the common prescription, what you always hear from the central bankers, is we're going to lower interest rates to stimulate. That doesn't work. It only works when we're not at debt saturation. It only works when everything's growing and you can play that game. We're well beyond that. We're into the point where there's so much debt and there's so much debt servicing that we Austrians call it pushing on a string. You lower interest rates to stimulate the economy and nothing happens. We've been there for 10 years. Japan's been there since the 1990s. Okay? Right. There's no growth. And ECB is there now, has been there, and will continue to be there. And so, in very simple terms, what you want to do, what Draghi should have done, if he wasn't absolutely worried about a sovereign debt crisis wiping out the entirety of the European political union, is he should have held his water and raised rates. He should have held his water in January, not changed policy, and kept his hawkish stance. But when he didn't, and when Powell followed him by changing communication strategy, remember, Powell raises rates in December and then immediately 45 days later changes communications completely. Oh, I'm now worried and I may have to lower rates later in the year. Said this. And the minute that happened, I'm like, oh, things are 10 times worse than they're letting on, 100 times worse than they're letting on. And they know what the situation is. And because these major central banks like the Fed and the ECB do not change policy over a 45-day period like that. They just do not. The last time that happened was in 2007 when Bernanke started to lower rate, went from raising rates to immediately cutting rates by 50 basis points. Now, Powell didn't do that. He took 6 months before he cut rates. Learning from Bernanke, you don't make a U-turn like that, because if you do, 3 months later we had Bear Stearns, or 6 months later we had Bear Stearns. Okay, so that's the situation. They're desperately trying to stage manage this, but they're completely incompetent, Rich. The important thing to remember here is that they don't know what the hell they're doing.
Well, I think there's
this is what's actually going to, this is the primary trend that they can't stop. I was talking about earlier. Politically, the primary trend is that all of these philosopher kings and all of these people who think we're supposed to know better, that exist in Parliament and the Speaker of the House and the people who run the EU and all, they're all freaking incompetent, and we all know it.
Well, Tom, there's a few other things in there.
Except for the Remainers.
No, there's a few other things in there why I think so just about the euro and the EU. So I reckon that the EU has got a maximum of 2 years. Maximum. right?
That's aggressive, but well, 2 years of as a political union or before a sovereign debt crisis.
As a political union.
Wow. Okay, that's an aggressive call.
Right, because the euro is unsustainable. They
It
got
is.
no money, and
I
then
know.
we're gonna have, China's got debt up the yin yang. The US has got debt up the yin yang. Japan, the Japanese central bank are buying stocks. The only place, and this is for another conversation, that's any halfway decent is Russia. Putin's done a really, really great job with Russia. Really, I don't
Yeah,
speak
they
Russian.
have. They really have.
They really have, right?
You
Economically.
you
But
are. I think you're very close to being correct on this. Let me just put a little bit of more color on this. The Japanese are done. They're just waiting for the Europe to collapse, and then they will be. And the only reason the Japanese haven't collapsed is because the Bank of Japan can not only they're completely trapped. They own over 50% of the Japanese government bonds that have been issued. They own unbelievable amounts of stock, but there's also a very insular. We call her Mrs. Watanabe. Mrs. Watanabe is still buying Japanese government bonds. She's still investing in Japanese companies, and there's just still that very insular. Even though they're losing money, they still do it because it's the way Japan operates, and it's culturally the way it is, and that's letting them off the hook and avoiding the worst of it. Europe is the real linchpin, and Trump's been doing in many ways. So again, I get angry with Trump about a great many things, but one of his instincts that's very correct is that the European Union is evil. And needs to be dealt with, right? And he is rightly putting pressure on the right people within the EU, and his backing Brexit is also kind of it's necessary to give Brexiteers the kind of support that they need because everybody else is against them. But he knows that by putting pressure on Germany the way he has with threatening tariffs and all the things that he's been doing. It actually helps to accelerate the process to the downside. And so he's doing his part without looking like he's doing his part. And I will give him credit for that. Donald Trump is not stupid. Okay. And anybody who says that he is lying to themselves. He's not stupid. He is miseducated. Okay.
Mhm.
Like a lot of people in this generation are.
Yeah,
These
he may be
politicians are
clumsy.
just miseducated.
He may be
Right.
clumsy. He may lack diplomatic finesse.
Sure.
Right. But he's
Right. There's many things about Donald Trump that are not laudable, okay? But his intelligence is not one of them. How he applies that intelligence, again, specification versus implementation, is a different story. And that's where he and I differ. He and I want the same things. He wants peace in the Middle East. He wants this. He wants to denuclearize North Korea. He wants, doesn't want Iran to have a bomb, yada, yada, yada. All these things. Wants the European Union to go away. Wants us really out of the UN if necessary. Would like to get us out of NATO. All this stuff. He wants all that stuff. I agree with him. How he's going about it, whoa. That's where the problem lies.
I want to say why I think 2 years, right? So one,
okay. I'd love to hear this. Great.
It magically came to me in a thought. That's why, right? Okay. But if I look at the factors, so one is you have the global economy going down the pan, right? Crises everywhere. People, there's no confidence. You have, and then what Draghi did today with QE and lowering the interest rates, that's going to accelerate things. With what's happening in Italy with this new government, that, as far as I can, they're not going to last. And Salvini's going to come back pretty fast.
Yep.
With a whole lot more power, right? He'll have a clear majority, and he doesn't need to kowtow to any pro-EU sentiments within Italy. He can just stand strong and tall for Italian sovereignty, for Italian bloody gold, right?
Yes.
Our gold,
all that stuff, all those issues, the Italian gold. I know. I agree with you, Richard. I know. I've talked about this a lot extensively on my live streams. I've written about it. Salvini.
I've learned a lot from you, right? But also,
I'm happy to hear that because I have worked really hard at that. But
with France, you got Yellow Vest in 10 weeks' time. 10 weeks' time? No,
a year.
44.
Yeah,
This
8
Saturday.
weeks.
44 will be week 44 of the Yellow Vest.